Okay, so professors, in finishing today's class, we'll look at the creditors control account. I appreciate the items that are used to prepare it, and of course, analyze whether they increase or reduce the creditors balance. So briefly, we say that the creditors control account is also a summary of the individual creditors account in the purchases ledger. So it is also known as the purchases ledger control account or payables control account. Because creditors are sometimes referred to as payables, as debtors are also referred to as receivables. Now, with regards to the items that are used in preparing the um, purchases ledger control account, obviously, if credit sales was used for debtors, then definitely credit purchases would also be in the picture here, right? If we had return inwards for debtors, then for creditors, that will be return outwards. But let's look at the items here. So we have first, which is the purchases returns, also known as return outwards. Right? So we get this information from the return outwards journal. Remember, the sources are also very important. It's a highly examinable question where you'll be asked to identify the source of getting these items to prepare your table. So take note of them. The cash or check paid to creditors. Right? You see, this is the opposite of the cash or check received from debtors. Right? These are creditors, so we pay to them. You'll find this in the cash. Then discount received, the opposite of discount allowed. Right? So frankly, if you appreciate your your debtors items, then of course getting the creditors items will be easier. So discount received, you find that in the cash book. We saw bills receivable in debtors. Here will be bills payable, right? Then the contra entry or the setup I spoke about. Okay. Using a debtor's balance to cancel a creditor's balance or vice versa. That's a setup or contra. Then the credits, the famous credit purchases, which is the beginning of these creditors in the first place. When we purchase from them and we don't pay, that's credit purchases. Then we get creditors into our books. You have cash refund from suppliers. So your suppliers can also refund certain monies to you, like we had cash refund to debtors. And lastly, the transfer of what? Balances. Okay, now let's do the gymnastics with it in the debtors issue here too. So let me pick my pen and illustrate you. So you realize that in the debtors account, we said debtors have a debit balance. So for creditors, they will have a credit balance. Creditors have a credit balance. Right? So then what it means is that if these items, if the item is going to increase the balance, then we would credit it. So for creditors, because they have a credit balance, when the item will increase the balance, you credit it. And if the item will reduce the balance, you do what? You debit. So it's the opposite of the debtors account. For debtors, we debit what increases the balance. But for creditors, we credit what increases the balance. And I think it makes sense. Okay. So let's do the analysis by picking the first one, which is purchases return or return outwards. Professors, you know that this item reduces the balance. Because if, for example, Malcolm is our supplier and we want to purchase 20 million worth of goods from Malcolm, and for that matter, we owe Malcolm 20 million Ghana cedis worth of goods. If we return some of the goods back to Malcolm, say 1 million worth of the goods, then we will no more owe Malcolm 20 million. They are going to owe Malcolm 19 because the return outwards will decrease how much we owe them. So return outwards will be debited. The next one, which is cash or check paid to creditors. If you pay money to your creditor, it is going to reduce your debt with them. So for that matter, that one will also be debited. Discount received. So these are allowances that the creditor is giving the business, and it's a reduction. Okay, so that is also going to be debited. Bills payable, which is also a form of a medium for payment. Okay, so it's seen as a document that acknowledges that the debt has been settled. So if we issue this bill to our creditor, we are telling the creditor, we have paid you or we will pay you, and for that matter, the creditor will acknowledge and decrease the debt that we have with him. Bills payable would also be debited. And the next item, which will be the contra or settle. So creditors have a credit balance, so definitely set-offs will be at where? The debit side. For set-off means you are canceling the creditor's balance, and the creditor's balance is at the credit side. So if you want to cancel it, you debit it. Okay. So amongst the item, it is contra that you see in both the creditor's account and the debtor's account. So mostly that item appears twice, one in the debtor's account and two in the creditor's account. And when we start solving examples, I would demonstrate that. Credit purchases. We are purchasing from the supplier on credit. That will mean that we owe the person more. So that will be credited. Then cash refund from suppliers, of course, that would also increase our balance. The person we owe is giving us a refund, right? Then that would increase how much we owe or restore how much we owe. So that is also going to be credited. And of course, I'll demonstrate the transfers and the balances later on. But what I want my professors to acknowledge now is the items used in preparing these two accounts and why we debit and why we credit some of these items. Please, I'll pause here for questions. If there are no questions, I'll quickly summarize what we have done today and call it a day. So question time. So, professors, let me say that even though we have discussed most of the items, if you see an item and you are not too sure, you can try and digest it to determine whether it will increase the balance or reduce the balance. In the case of a debtor, if you are able to determine that it will increase the balance, then you debit it. If it's going to reduce it, you credit. But for the case of creditors, if the item is increasing the balance, you credit, and if it's decreasing the balance, you debit. Any question, professors? Prof. Charles, Prof. Adam, Prof. Ella, Prof. Ashley. Any question for Mr. Mo? Okay, no questions. Then I guess I think I'll have to share the notes with you on the page. I'll add that of the BRS too. Yes, so that you can have the notes. And for or better, so you have the textbooks, right? So these notes are the same as you have in your textbook. So I guess maybe I would have to skip. But if you need the notes, let me know so that I'll share them with you. Okay, so professors, let's wrap up today. Hopefully when we meet next week, we'll discuss the outstanding concept and start solving examples. Thank you very much for today. I really appreciate your contributions in class. And for those who had network challenges, I want to appreciate your effort to keep coming and staying in class. Take very good care of yourselves. I'll see you when I see you. Bye-bye. Okay, I think there's a question for me. Prophet, okay, let's hear you.
it wasn't a question. I just wanted to ask when you get the video for the class.
Yeah, so I'll try my best to do it by close of today. What actually happens is I would have to convert it and upload onto the YouTube channel before forwarding to you. That's why sometimes. But I'll do my best and send them today. You can keep prompting me on the page.
Okay.
Thank you very much.